All right, today we're going on a bit of a quest. We're going to dive deep and figure out exactly what it takes to launch a hedge fund right here in Canada. It's a pretty fascinating world. We're talking high risk, potentially high reward, and you guessed it, a whole lot of very specific rules that we're going to navigate together.
So why would anyone even want to take on this quest? Well, a huge part of the appeal is getting into the legendary 2 and 20 club. Now, if you know, you know. This is the classic fee structure for a hedge fund. Managers charge a 2% fee on all the assets they manage, and they get to take a 20% cut of any profits they make. It's a seriously powerful incentive, and it's why this industry attracts some of the sharpest minds out there.
But hang on, what is a hedge fund really? Well, at its heart, it's a pooled investment fund, kind of like a mutual fund. But here's the twist. Unlike those mutual funds your parents might have, hedge funds are playing a totally different game. They use way more aggressive and frankly riskier strategies. We're talking about things like short selling, which is basically betting a stock's price is going to go down, and using complex financial tools like derivatives. These are things that are pretty much off limits for your standard run-of-the-mill funds.
And this comparison really lays it all out. On one side, you've got mutual funds. They're built for everybody, the general public, with lower fees and safer, more traditional investment strategies. But on the other side, you've got hedge funds. Think of them as the exclusive, private club version. They cater to wealthy folks and big institutions who can actually afford to take on more risk, and they operate with those high fees and a ton more freedom to make aggressive moves. It's a completely different playground. So here's our roadmap for this quest. First, we'll get a solid handle on what a hedge fund actually is. Then, we're going to try to navigate the wild and winding regulatory maze in Canada. After that, we'll talk numbers. What's the price of entry? Then, we'll cover how you stay on the right side of the law. And finally, the big one, how you find your allies and raise the capital to make it all happen. So there it is, the call to adventure. That promise of the 2 and 20 model is a powerful motivator for sure. But to have any shot at success, a founder has to understand the landscape. Let's start with maybe the most critical part of that map, especially here in Canada, the regulations. Okay, time for our first major challenge, making it through Canada's regulatory maze. And I call it a maze for a reason. This is where the Canadian journey is completely different from the one in the US, and you're going to need a different kind of map to get through it. And this, right here, this is the whole story. In the United States, there's one big boss, the SEC, the Securities and Exchange Commission. Simple enough. But here in Canada, we just don't have that. There's no single national regulator, and that changes everything for someone trying to start a fund. So how does it work then? Well, all the regulation is handled province by province. Now, these different provincial bodies do work together under one big umbrella called the Canadian Securities Administrators, or CSA, but you still have to deal with them one-on-one. For hedge funds, Ontario's the big leagues. It's the most important jurisdiction by far. And here's the kicker for any founder. If you want to raise money, you have to register as a dealer in every single province where you plan on having investors. Yep, every single one. Every quest has a cost, right? You've got to pay the toll to get on the road. So what's the price of entry for this one? What does it actually take in terms of cold hard cash and credentials to get a fund off the ground?
First up, let's talk about the financial toll. Right out of the gate, you should expect to pay somewhere between 25,000 and 35,000 Canadian dollars, and that's just in professional fees. This covers all the legal and administrative stuff you need to do just to get the fund structure set up. Now, you might think this takes forever, but here's the surprise. The whole process is actually pretty quick. Typically, we're talking about 1 month from start to finish. Don't get me wrong, it's a super intense month, but it's not some years-long process like you might imagine.
Okay, so besides money, what else do you need in your founder's toolkit? Well, you need credibility. You need to look the part. Investors are going to want to see a really strong background in finance, maybe some experience at a big bank, and of course, professional certifications. We're talking about things like the Chartered Financial Analyst, the CFA, or the Chartered Investment Manager, the CIM. Honestly, without these, trying to attract capital is going to be a serious uphill battle. And on top of those startup fees, you've got to have some skin in the game yourself. This is the minimum capital you need to have just to operate. This table shows the numbers for Ontario, which is the main hub. As you can see, the more you do, the more you need, maxing out at $100,000 for an investment fund manager. Okay, so you did it. You paid the fees, you've got the capital, your fund is officially launched. The quest isn't over. Oh no. In fact, it's really just beginning. Now you have to follow the rules of the road, and that means staying compliant.
And let me be clear, these rules are absolutely non-negotiable. Getting this stuff wrong can end your whole adventure before it even gets going. You've got super strict deadlines for your financials, an audited report every year, and an unaudited one every 6 months. You also have to follow all the provincial laws on stuff like insider trading, and of course you've got to comply with federal laws against really serious crimes like money laundering.
And that brings us to the final, and maybe the most critical part of this whole quest, raising your capital. Because, let's be real, a fund is just a cool idea until you have investors. So how do you find those allies?
In Canada, when it comes to marketing your fund and bringing in that cash, you basically have two main paths you can take, and each one has its own set of pros and cons.
So here's the choice you have to make. It's a classic trade-off. You can create a formal prospectus. That's a super detailed document outlining everything about your fund, from strategy to risks. This lets you market to a much broader audience. Or you can skip all that paperwork, which gives you way more flexibility, but it severely, and I mean severely, limits who you're allowed to sell your fund to. And that's the million-dollar question, isn't it? If you take that more flexible, no prospectus path, who are these specific, qualified investors that you're actually allowed to talk to? Well, the list is pretty exclusive. You can sell to what are called accredited investors, and we'll define that in just a second. You can also sell to anybody who's willing to put in at least $150,000. And finally, in a few provinces like BC and Nova Scotia, you can sell to certain investors as long as they sign a special form that says, yep, I know the risks. So, you keep hearing this term accredited investor. What's that all about? Well, it's a term defined by the government for people or institutions that are considered sophisticated enough to handle high-risk investments. Generally, this means big players like government agencies and banks, or individuals who have at least $1 million in net worth or make over $250,000 a year. And that really brings our whole journey full circle. If you boil it all down, the Canadian system for launching a hedge fund stands out from the US for two big reasons. First, the startup costs are generally lower. And second, that one-of-a-kind, province-by-province regulatory system instead of one single federal boss. So there you have it. We've laid out the map, we've looked at the challenges, and we've seen the potential rewards. The only question left is the one every potential fund founder has to ask themselves. You've seen the terrain. Is your strategy actually ready for this quest?